Imagine trading a chicken for a cow. Sounds simple, until the cow owner doesn't want a chicken. For thousands of years, humanity had a problem. We had food, tools, animals, gold, but we had no way to agree on what any of it was worth. Then humans invented something strange, something that built empires, started wars, created billionaires, and controls almost every part of your life. The weirdest part? Most of it doesn't even exist. You can't touch it, you can't hold it, yet the entire world runs on it. This is the strange history of money. Long before money existed, humans traded directly with each other. This is called barter. If you had fish and wanted bread, you traded fish for bread. Simple, at least in theory. But barter had a problem. Both people needed to want what the other person had. If the baker didn't want fish, the trade failed. Imagine trying to buy a house with goats, or paying for clothes with potatoes. As villages became towns and towns became cities, barter became a nightmare. Humanity needed something better. So people began using items that almost everyone valued: salt, shells, tea, animal skins. In some places, giant stone discs were used as money. Some were so large they couldn't even be moved. Yet people still accepted them as valuable. Why? Because money was never really about the object. It was about agreement. If enough people believed something had value, it became valuable. Then came one of humanity's greatest inventions: coins. Around 600 BC, ancient kingdoms began stamping pieces of gold, silver, and bronze with official symbols. For the first time, people didn't need to argue about value. The coin already represented it. Trade became faster, markets expanded, cities grew, empires flourished. Money was changing the world, but coins had a problem. They were heavy, easy to steal, and difficult to transport over long distances. So humans invented something even stranger: paper money. At first, many people thought it was ridiculous. How could a thin piece of paper be worth real wealth? But the paper wasn't the important part. Trust was. People trusted that the paper could be exchanged for something valuable. And over time, that trust became stronger than the paper itself. Then humanity took another step. Banks appeared. Instead of carrying wealth, people stored it. Instead of trading coins, they traded promises. And those promises became the foundation of the modern economy. Then something incredible happened. Money started disappearing. Today, most money isn't gold. It isn't silver. It isn't paper. It's just numbers. Numbers stored inside computers. Your salary, your savings, your bank account. Most of it exists only as digital information. If an ancient merchant saw modern money, they probably wouldn't believe it was real. Yet every day, billions of people trust it. They work for it, save it, spend it, worry about it, fight over it, build their lives around it. The strange part is that money has no power on its own. A coin is just metal. A banknote is just paper. A number on a screen is just data. Money works because billions of people agree that it works. It's one of the largest shared beliefs in human history, a story accepted by almost every person on Earth. And that story built cities, connected continents, funded inventions, and transformed civilization. The lesson isn't that money is fake. It's that trust is powerful. Powerful enough to turn paper into wealth, powerful enough to make numbers change lives, and powerful enough to shape the entire world. Because in the end, the history of money isn't really the story of coins or banks. It's the story of human belief. And what happens when billions of people believe in the same idea? Money may be humanity's most successful invention, because it only exists if we all agree that it does.